first example I want to show you here is the difference between day trading and longer term trading. Let's say that on our Facebook we've done some analysis and we think that it's going up, and once it breaks out of this channel that it's in, we think it's going to go up even farther. So I'm going to right click and format my strategies. I'm going to click format here, and we've got a buy, and we're going to use a stop because we want to go long once it breaks out of the channel that it's in. We're going to have false for take trades today only because I'm showing you historical data here. And we are going to exit at the end of day, and our entered trade price is 61.3. We're going to place our orders when we're within 2 points of the entry price. Our stop loss is 1.5. First target points is 0.75, and second target is 1.8, and the third target is 4 points. And we're going to scale out a third at each of these targets. I'm going to hit OK and close. So we see that it opens higher and it may break out, and as it goes forward we see that we do get our stop entry. We are now long, and we reach our first profit right here. Since we do have that we're going to get out at the end of the day, when it reaches the end of the day it goes ahead and gets out with a little bit of a loss. Now suppose that we wanted to let it go overnight or longer. We thought it was just going to keep going right on up, and we're going to say exit end of day false and OK and close. Now it takes the first profit, but it does not get out at the end of the day, and we see that in fact it goes on down, and for a whole day it stays in this trade, and the next morning it stops out on the open. So to avoid this stop loss, there are a couple ways you can do it. You can't avoid all the stop losses, of course, but let's go back to where we entered here, and suppose you said I want to put a break-even stop. Once I reach my first profit, I don't want to lose anymore because I've already got a winning trade. So you could go down here to Insert Strategy, and we're going to go down to Stops and Targets. This is a strategy supplied by TradeStation, and click OK. Double click on it to format it. We're going to use 1 here. Your choices are 1 or 2. 1 is per share. We're going to calculate stuff per share here, or 2 is position. We'll use 1. We already have profits in, so we're going to just put a 0 here. We already have our stop loss in. We're going to put a 0. That's already in the other strategy. But what we're going to do is we're going to put 0.76, and 0.75 was our first target. So this means once it's pierced our first target, so we know we've actually achieved it, we're going to put a break-even stop, and we'll leave the rest of these as they are. Hit OK and close, and now you see we have taken our first profit. It sets a break-even stop and takes that stop when it comes down to that point. And then as you can see, it takes another trade down here. The same sort of situation happened as here. We had gotten below the price, and it went ahead and put the stop order, and we're entered into another trade right here. Another thing you can do is add a trailing stop if you like. Right click on the chart, format strategies, and you can double click on a strategy to format it, or you can click this format up here. I'm going to double click over here, and instead of a break even, I'm going to put a 0 there. I'm going to have a dollar trailing amount. So I'm going to again put 76 so that once we've gotten to our first target, we don't want to lose anything. So we want to make sure we're positive at the end of this trade, and we're going to click OK and close. Now you see we take our first profit. It does have a trailing stop, comes back down, and we make a little bit of profit instead of a break even on the second half. Now let's take a look at the strategy placed on a Forex chart, EUR USD. The strategy is already on it. You can tell it has a strategy by the SA that's up here. And I will right click, Format Strategies, and we're going to format it to take a look at what I've got. I'm going to trade a lot size of 100,000. We're going to sell. We're going to use a stop order to enter because we want it to break out below a certain level to enter a short. Take trade today only will be false because I'm showing this to you on historical data. I have start look for trade time at 0, which is in the middle of the night, and look for trade time 14:30. Exit end of day false, so this can take more than one day to complete the trade. And we'll place the order 0.01 points from the entry price. The trade will be entered at 1.389. The stop loss will be 0.004. First target points 0.004. Second target points 0.012. And we don't care what the third target points is because I'm going to take 50% of my lot size out at the first target and the remaining at the second target. Now we will click OK, and I will click close. So what we chose for our entry price is when we want it to fall below this level here, we will enter the trade. And as we see, it did enter here and took its first profit quite quickly, and the trade remains throughout the next day until 8 o'clock in the morning, and it takes its second profit here. Now I'm going to show you a trade for the emini. This is the current contract, is the YMM14. We have the at sign, so it's a continuous contract, but you can't trade at YM. You can only trade it if you have the current contract name up here. Let me format the strategy and show you the parameters. I'm going to trade 10 contracts. I'm going to sell, again use a stop because I want it to break a certain price before I go short. Start looking for trade time at 8:30. I think my price is going to happen between 8:30 and 10, so I've chosen that time frame to get in. I'm not going to exit at the end of the day. I will place the order 30 points from the entry price, so that's 30 points. When the price gets to 30 points above the entry price, I will place my stop order. I will enter my trade at 16,410. The stop loss will be 20 points. First target is 20, second target is 40, and third target is 70 points. And again, we're going to scale out a third at each of the three different targets. I'll hit OK and close. And as you can see, it did enter the trade with the stop order. It took its first profit right away, the second profit a couple hours later, and the third profit actually before the end of the day. So it did get out at the end before the end of the day, even though I was willing to let it allow it to go on beyond the end of the day. One last example, again on the emini. This time we're going to buy rather than sell. And I already have the stops and targets in here, so let me show you how this works. We're going to do 10 contracts. We're going to buy. We're going to use a stop order, meaning it has to come up to the price that we want. We're going to look for trades anywhere from 8:30 to 14:30. We'll let it go beyond the end of the day. Place the order 30 points from entry price. The enter trading price will be 16,521. Stop loss 20 points. First target 10 points. Second target 20, and third target 70 points. Again, getting out a third at each of these exits. Okay, and close. And you can see that it did take a long here. We got our first profit, our second profit, and because I had the stops set to do a break-even stop, it took a break-even stop instead of reaching the third profit. Then, because I had it take a trade anywhere from 8:30 to 14:30, it goes ahead and gets in again here. Takes our first profit here, second profit right here at the end of the day, and stays in all night into the next morning, and it's still in that trade, and finally takes it at 8:30 in the morning. It takes its third profit. That's probably enough for this video, and in the next video I'm going to show you how to determine the number of points away from your entry price that you want the order to be placed, how to automate your strategy so it takes trades for you, how to turn off automation if you want to manually manage your trade, and how to set up your strategy so you can have a trade plan days or even weeks in advance and not engage your money in an order in the market until the price is close to your entry level. So we'll see you in the next video.